Good morning, it's Jonathan Barratt with the morning debrief. It's Friday, last day of the trading week, and it's June the 11th, so obviously we're cranking into June quite nicely. Well, a little bit of relief last night, which was good. Good economic data came through. Commodities were up, Aussie was up, gold was down, which wasn't unexpected. And also oil was up too, so that was quite a good thing. So overall, quite a good night. Probably expect our market to open up quite aggressively as well. But let's run through some of the closes and some of the trade ideas which we have on. I guess more importantly, or one of the most important things before we get into it, local market. There we are, 4,509, up 68 points. I think that's not too bad, and hopefully it'll close on the week on a good note. So let's anyway run through just a couple of things last night. The Dow was up 273 points, 10,172, regains the 10,000 handle. The S&P 1,086 failed to breach that major support we had, which was around 1020. So quite comfortable there, up 31 points. The Nasdaq up 59 at 2,218. Europe also had an interesting evening, and that was quite positive as well. When you look at what's happened there, Europe, the Stoic was up 52. The FTSE was up. FTSE was up 46, and the DAX was up 71 with the CAC up 69. All relatively positive there in the UK. The only negative thing is obviously BP that traded to its lowest lowest level in close to a decade. Obviously concerns there of the Gulf underpinning that move. Okay, US stocks advanced an economic growth outlook, which was good. Also some very positive data out of China yesterday in terms of export growth, which was probably about 50% higher than was the same period last year. That's very encouraging. We've also got a whole raft of data today in China. It'll be widely watched, there's no doubt about it, and it'll either set the move for a resurgence in hot commodities, or we'll see things just steady off. But anyway, a little bit more on that later. Crisis exports, there we go. Korean jobs, Asia's looking quite good. We can see all that. That's probably about it in terms of all the bits and pieces there. So let's see what else might have come and affected. Trichet, that's interesting there. Bank of Japan, no, that's okay. I guess if anything there, data in itself was quite supportive, and that's quite encouraging. And let's see if it continues. Okay, let's just have a look here now. We'll obviously look at the trades which we do like. Obviously, dollar index is the key. This is going to be quite interesting for a lot of us because, as you know, we've all followed the same rhetoric in terms of this breakout. And we've all been following it quite nicely because, as you can see, the trend has changed. A breakup, failed to move, coming lower, and of course we've just seen that little gap down to 86, 82. I want to check that because that's quite an aggressive move to the downside. Now, what does that actually mean? It actually means that that we're breaking a trend, which suggests now that US dollars will be weaker for some time. It also suggests that those risk aversion trades will be coming off, and as a result of those risk aversion trades coming off, US dollar comes under pressure, gold will come under pressure. Okay, as people know, we took on that very cheeky short at 12.32. 12 actually 33 and 3/4 was the actual price, and that was very cheeky, very risk aggressive, and but it seems to be paying off based on what we feel. So when you look at this actual trade here, you can see that this is a beautiful thing because it traded up, it's failed, and now it's come back. So what we can anticipate is she comes back to around these levels. This here is just a gem. It's virtually confirmed divergence, which indicates that we can see this US dollar under pressure right now, back to that 84, maybe even back to 82. So you know, this to me is good stuff because it's the start of some good trends. But we've got to see what those numbers out of China actually do. Okay, so that's the dollar index. Let's have a look at the Aussie. You can see here, nice strong move. This all looks quite positive. Aussie needs to take out that high there, which is that 85.50. We take that out, then we're probably back to 86. We are long Aussie, and long Aussie from some very good levels. Euro, also looking at that euro, first sign of a little bit of a bounce. Like to see it. Still not out of the woods yet, but certainly looking a lot more encouraging. Good signs of diverging markets here as well. So I'd be probably looking for that right area to put on some euro again. Just have a look at this hourly chart because it's not giving you a 100% aggressive buy yet, and this is where the trend might come. where we do see a little bit of a dip. But keep an eye on that dollar index, because that will be the key, and I feel that we can be comfortable taking off risk aversion trades. Let's have a look at some of the commodities, particularly gold, because gold's one. If you've been following my Twitters, you will note that we're short, basically, and quite happy for that to occur. As you can see, the hourly chart, it is an aggressive trade. It hasn't told us yet that it's going to come under a lot of pressure, but you can start to get a sense of the fundamentals that if these risk aversion trades are taken off, so too will gold. This is a confirmed divergence, by the way. And that, in my mind, we have here at 1250, and we didn't quite get to it before, in fact, 1252. And as you can see, these momentum indicators here are indicating a turnaround. This could mean that gold price can come back to about that 1170 again. But let's see how that will take each step as it comes. Looking across the crude, we had obviously infantry draws the other day, quite aggressive on those fronts, and we've broken above those areas which we mentioned. We do want it to stay above it. There's no doubt about it. And that 65.20 was the break to that top side. And there you can see it now. She's come off from that 76. We are long there and comfortably just sitting on our positions. Certainly feel with an uptick in economic confidence or in confidence across the board, that should spur on expectations towards a full recovery. And as a result of that, commodities will come in need. Okay, let's have just go through, have a quick look at the local markets. Excuse me. The SPY obviously last night closed up, and it'll be a positive opening today. So I'd like to think that it will continue to move higher. As you see, we really needed to see it break above that 4,500. It looks like we're intact for that to occur. So there we are. You can see that a little bit better. It doesn't look like the. Let's just try and get that down. That's the hourly, but I want to have a look at the daily. Okay, there it is there. And I think we're out of the water, nearly, and all this stuff is quite positive, and what it does is it's confirmed this is the big range, back to 4,600, maybe a little bit higher. Okay, so that's a bit on that. Natural gas, all those ones we've been following as well, all look okay. The wheats and the corns have slowly picked up as well, so I've been quite encouraged by that. We have taken positions off, but we are small across the board. Just have a quick look at sugar. Sugar is something which we've been long for a while, and that seems to be trading quite nicely. I do expect sugar will trade and break through that 16. Sugar actually falls in the same category as the way I see it as natural gas in terms of an alternative, and I think that these alternatives will be sought after, and in fact, indeed, this is the fundamentals that actually put a low in place for them. Just having a look at wheat and corn before we get on to the other work. Wheat and corn obviously still bumming around here on the lows. Let's see what happens. I do like it and feel that the uptick will help them. We're obviously going through harvest times at the moment in the States, and that's certainly sort of putting a bit of a dampener on where we think things will go there. Economic calendar. Now, this is going to be the big one. Today, it's going to be quite aggressive. Let's see exactly how everything unfolds. And here we have PPI, consumer prices, retail sales, industrial production, all out of China. Look at those numbers. It's going to be quite aggressive, but if they come out, it's going to be an interesting day. We've got a lot of data as IP in the UK as well, not expecting to be that positive, but none the same, any sort of positive move or any positive number will be supportive. And in the States, obviously, we've got retail sales and some confidence and business inventory. So all those are expected to show a good increase and show a supportive in terms of the market. So it's going to be quite a good night, good day anyway, if we get those good numbers out of China. We're all quite optimistic about it, but these things are sent to testers. Sometimes you find it's more of a buy the rumour, sell the fact. But if it is buy the rumour, sell the fact, we can still be assured that growth is still there. And so those dips, in my mind, therefore, will be supported. That's about it for me. Hope you have a great day. We've got some good trades on. Tune into the Twitter, tune into the Facebook. There's some good reading on that, and we'll certainly talk to you tomorrow.